turning back to kind of U.S. policy, and again, this is another one where I don't want it to get too political, but we have two questions. One is from Chris in Ardmore, Pennsylvania, up the street here, and he asks, or potentially she asks, what is your assessment of the impact of decreased U.S. participation in global trade deals and higher trade tariffs on U.S. and global economic growth and equities? And then a question just in was similar, how would unraveling NAFTA impact the market short term? So trade, if we put up trade barriers, how does that impact the U.S. markets, global markets, potentially?
Yeah, that's, I think, clearly one of the big wild cards. So that's, understandable, the questions. I think it's fair to say, and there's widespread economic agreement that not only if we've had an increase in trade amongst various nations of the global economy over the past 50 to 60 years, that the margin that's generally raised economic growth. And so if you would have, the question is trade as a percentage of the global economy, does that kind of go into decline? I would actually hope not. I think that if we saw a marked rise in protectionism, so I mean tariff across the board, you could expect a retaliatory strike by other economies. It could potentially hurt some other economies more so than the U.S. The U.S., although we're exposed to the global economy, we're not nearly as much so, say, as our trading partners, Canada or Mexico, right? Their trade with the U.S. is much higher than our trade with either of them. But it would be what I would call a deadweight loss, which means you would have modestly higher inflation domestically. I mean, trade has probably lowered consumer prices. If you said an average basket throughout the years they spent on $1,000 on consumer goods, that would probably be well north of $1,100 or $1,200 if you went back to the trade levels we had 50 years ago. So it tends to lower prices. That's not to say everyone makes out equally to that, and that's where I think some of this divide is and tension is. But I think for policymakers to look at the various trade policies, that actually happens with some regularity. So if they're small and they're targeted or negotiated bilaterally, I'm not as concerned as if there was a very large increase in tariffs across the board. The last time we saw that was in the 1930s, and although that may not have been the primary catalyst or contributor to the Great Depression, that certainly did not help economic growth prospects with the Smoot-Hawley tariff. So, although it would seem like, hey, we would become insular and so we trade with each other, there would be certain corporations that clearly would have to cut spending plans and investment plans because many of their partners are overseas. In fact, roughly 50% of earnings in the S&P 500 companies, so the largest companies in the United States, the revenues are derived overseas. I think also a thing that's a loss in the debate, though, despite all the discussion with it, I think it's harder said than done if one really wanted to close, some of the economy to trade. Supply chains, whether you manufacture a car or you trade computer software or make computers, those global supply chains are more integrated than they ever have been in just-in-time inventory delivery. I think it would be very hard to actually do that. And so that's different than what it would have been 20 or 30 years ago. So although we may see, industry by industry, increased both focus as well as discussions with respect to bilateral trade agreements.
It's incredible. We're looking at new cars, and you can see the laundry list of where all the parts came from. It's,
I mean, there's thousands of parts from hundreds of countries.
Right.
There's thousands of parts from hundreds of countries. So, and many of them have one or two suppliers for each part. So the other thing that would happen, one of the first things you would see is not only the financial markets potentially, sell off. You would also have disruptions in even U.S. Activity until you could work that out. We saw a little bit of this, unfortunately, a very unfortunate event, the earthquake in Japan. And so you saw certain industries, whether it's from tires to computer chips, production was really, disrupted globally because, the key components made by certain Japanese suppliers. So there's it's really increasingly intertwined that I don't think is fully appreciated.
Okay.